Hello everyone, thank you. Welcome to my presentation on IR35. I hope you'll find it entertaining, and obviously I want to try and make it as interactive as I can. What is IR35? Well, it's more correctly known as the intermediaries legislation, and it covers the situation where you've got the one-man consultant, contractor, coach working for a corporate. He will have his own company, but he might be working direct to the client through his company, or there might be an agency in the middle, which is often in practice more common. It applies where the services are personally performed by the contractor or consultant, and where the circumstances are such that if you didn't have the company or the agency in the chain, then the contractor consultant would actually be employed by the end client. In addition, the contractor must have the right to receive a payment or benefit that is not employment income. And with the revenue here, looking to construct a hypothetical contract between the contractor and the end client. Okay, so here we have a typical IR35 situation. We've got Jim, the contractor, with his own company, Codemasters Limited. He works for Agency Central, and they invoice his services to IBM, the corporate in the chain. So this is the most common situation I encounter, and the situation which a lot of my clients work under. Okay, so we need to look at the contractual terms here between Jim and the corporate. And the contractual terms we're talking about are on the lower contract, i.e. the contract between Jim's company and the agency. The other contract between the agency and the IBM is called the upper contract. That's not often brought into scrutiny in IR35 cases, but there are cases where it has been. And in those cases it's been highlighted that that upper contract between IBM and the agency has to be consistent with the lower contract between Jim's company and the agency. Okay, so we've got to look at this contract between Jim's company, Codemaster, and the Agency Central. So what can Jim do to protect himself? Well, he's got to have key terms in his contract. These terms have got to cover mutuality. If you like, that's the right not to work if he chooses not to. He's got to cover substitution, the right to send somebody else, and it's got to cover control, the right for Jim to work how and when he wants. So if you look at mutuality, this is the idea that Jim is not obliged to work. There's no mutuality of obligation between him and the end client IBM. We've got a good clause here which states that the contractor Jim is not any under obligation to work for IBM. There's no contractual obligations existing between them. So that's a good concise clause. We've got a questionable clause here which is longer, more ambiguous, more qualified, and that's really not going to be very helpful. A good substitution clause. Here we've got a straightforward clause. There's no real degree of qualification, which means that the end client have to vet the substitute. So that's a good clause. Again, we see a longer clause here which is more ambiguous, not as clear. So really these sort of clauses aren't very helpful. You want a clear, concise clause, like the first one. No control. Here we're saying that Jim the contractor has a method of work which shall be his own. That's a good clause, saying that it's not controlled by IBM the client and the way he works. On the other hand, we've got another longer, more questionable clause here, which isn't as good. These are in your notes if you want to look at these afterwards, but I just really wanted to look at show the good clauses, what you really should be aiming for. Okay, so here we're looking at trying to really have a flow chart, some sort of science into it. A lot of tax specialists in this arena regard this as an art, but I'm trying to put some science in it for you, and hence this flow chart. if we've got key terms present regarding control, mutuality and substitution, that's going to help. It's going to be a pass for IR35. If the terms are contradictory, it's likely to be a fail, as is the case if the key terms aren't present at all. In practice, you tend to have maybe ambiguous clauses, so then you have to look at the commercial terms, what we call the subsidiary clauses. Things like, is there financial risk? Does he have to make good his own work if there's a problem with it? Does he have to have his own indemnity insurance? Does he have to provide his own equipment? What is a notice period? These are really the terms you have to look at, and if those are good terms, then they might sway the contract to pass, even though the main terms are a bit ambiguous. So really, it is a case-by-case exercise reviewing the contract. There's some highlighted cases here. Subnatic case, the first IR35 case which made reference to this mutuality of obligation and the irreducible minimum. That's mean you need the minimum 3 key clauses we've talked about: control, mutuality and substitution. The Dragonfly case, 2008. This is one of the most well-known IR35 cases. It involved an AA programmer, and he was caught by IR35. When he looked at this practical situation, he was clearly part of line management of the AA, told what to do, working 9 till 5, under their control, never provided a substitute, and he was actually caught by IR35, as I say, and an award of £98,000 tax was made in favour of the revenue. Interestingly, the revenue never actually got that money. Why? Well, in common with a lot of companies like Jim, it made sure there's no money in the company, so if he was caught, there's no money to pay the tax. Could they go after him personally as a director? Well, they couldn't, because he wasn't a financial guy, he had no financial background, he was an IT specialist, so he couldn't impute knowledge that he should have known better, should have set aside the tax, should have applied IR35 to his payroll calculations, so he effectively got away with it. But there's still a precedent that he was caught because he failed the rules, and it's one of the first cases which actually went through the rules in court. Tilson Alstom Transport, that's not actually an IR35 case, but it's interesting for the precedent. Here the taxpayer failed to establish employment rights. It was the opposite situation. He wanted to be employed to get rights. He was not able to establish those rights. Tilbury Consulting. Here we have a Ford contractor. He managed to escape IR35 because relying on lack of control and a right to substitution, even though he may not actually provide one in practice. Clearly it's better to provide one in practice to protect yourself there, and you can often do that by having cross-substitution agreements with other contractors, consultants who can do the same thing as yourself. Novasoft, an interesting case. This is actually a case where the taxpayer had gone to revenue and asked for clearance of the contract and the procedure whereby they were prepared to review contracts and give you their opinion. He actually lost the case anyway, so perhaps that's a motto here is don't have your contract reviewed by revenue, because they will maybe go after it and attack you on the basis you've come forward and shown your contract which is perhaps not 100%, so that's a salutary warning there. Okay, so if you are caught by IR35, what are the practical implications? How do they calculate the tax due? Well, here we've got a calculation for 2009-10, which really shows the format of the calculation, what's called the deemed salary. In row A, you put all the benefits received by the contractor. In this case, it's you see going to the figures is £100,000, and then there's a flat rate allowance here to claim 5% the expenses. That's the row B, brings them down to a net income of 95,000 in row D. Then we're looking at the expenses and which you could have claimed if it had been employed, bearing in mind these are quite narrow. You've got to have expenses which are wholly, necessarily and exclusively, which is quite a tough thing to prove, really. Okay, so let's say you could establish expenses of 15,000, which are legitimate. You've got capital allowances on equipment he's bought, 2,500. Again, this is assuming you satisfy these very strict rules, wholly necessary exclusively. Accrued expenses. The row G, you've got some pension contributions you can claim. And claim, this is interesting, if you look at I, he's only actually paid himself £5,000 salary, which is very low, but it's often the case in contractor clients. So we've got total deductions in row K, 23,500, row L, a net figure of 71,500. You've got the employer's NIC, row M, so you've got a total deemed payment in row N of 63,000, and that's just for 1 year. You've got to apply tax to that. So you can see really how you can get to a lot of money if you start going back 6 years. Okay, so I thought if you sort of look at the report template, the sort of format of the report I'd use myself if I was reviewing one of your contracts if you approach me. What I'd be looking to do would be to identify the contract, the key criteria, looking for the control, mutuality, substitution clauses. I'd look at the main clauses in your contract and see whether they're complied or not, whether they're ambiguous, whether they're clear. I'd then identify the commercial terms I talked about, things like professional indemnity insurance, notice period, are you required to provide your own equipment. And then, what I'm getting to then is really to have a baseline view. Is there a hypothetical contract between yourself, the contractor, and the end corporate client? And then I'll be looking to draw a conclusion, subject to a true agreement. In other words, what happens in practice must be consistent with what's in the contract. Okay, so we looked at IR35. I hope that was interesting, and it is a changing area. We'll just look at the future in a minute later on to see what's changing and if the changes are going to be helpful or not. Okay, I wanted to quickly look at umbrella companies. It's often the term bandied around. Well, really, as an umbrella company is a company that acts as an employer to agency contractors who work under a fixed term contract, usually for a UK recruitment agency. Okay, so here we've got a situation where the contractor is completing a timesheet. It's invoicing the recruitment agency, the umbrella company receives the payment from the client, the umbrella company then pays the contractor after deducting pay as you earn. And then the contractor's effectively then got a gross payment with the right to claim expenses. In some cases the umbrella will pay all the expenses for the contractor anyway, so really he's effectively just got a salary which is being taxed. That's a situation one of my clients had recently working for an umbrella in France. They paid all the expenses, he just got a salary with a P60 at the end of the year saying what tax had been deducted to put on his self-assessment return. Assuming that he had to claim expenses and the client didn't pay them, well, he's looking at mileage, general travel, he's looking at the 45 pence a mile, 25 pence a mile scenario, he's looking at his hotel and accommodation expenses, and he's looking at his professional subscriptions. These are really like the employment type expenses. Now, food and subsistence is not allowed unless you're working away from home as part of your work. And if you work at the same location for more than 24 months, you can't then claim the travel expenses. Well, they're effectively claimed, but they become a benefit in kind. That's the situation of any IR35 contractor, so hopefully you're not going to be working on one contract for 24 months. That's going to endanger your status, but if you did, be aware that after that period, the expenses become taxable on yourself should you then wish to still claim them. Some myths about umbrella companies. Well, they're not managed service companies, that's something different. Offshore umbrella companies will reduce your tax bill, well, that's a fallacy. Umbrella companies will give protection from HMRC investigation, well, not necessarily. An umbrella company can pay minimum salaries, well, it can't, it will pay you a proper salary on a P60 with tax deducted. Okay, let's have a quick look at the future of IR35. The OTS, that's the Office of Tax Simplification, so-called, identified two issues. Need for taxpayers to be able to run profitable businesses, and the need for HMRC to apply the tax code to our revenues. Recommendations have been bandied around, well, suspend IR35, that hasn't happened. Keep it unchanged, well, that's sort of happened, and introduce a new genuine business test. Well, things have moved on. They have actually now introduced business entity tests, which are published. but they're a bit disappointing there really, testing one-man contractors against criteria such as have they got their own premises, have they got their own workforce. But clearly in most cases these things are not going to apply in some matters if they're trying to bias the test to catch the one-man contractor situation. Okay, so that's IR35. A lot of other situations we could lack, as you can see here, like in the construction industry, the one-man contractor is really the same problem. It's really a generic problem here about one-man companies and contractors often can't provide their own substantial materials or their own workforce, and that effectively they can't prove they got financial risk. So this is a generic problem. But anyway, we've looked at IR35, which I think is the situation you're going to come across, so I hope you found it useful.